Bitcoin may appear bullish on the surface, yet 5 strong bearish technicals have emerged and lined up with grim smiles, each having brought a shotgun to a bullfight. Here are the 5 reasons why Bitcoin looks riskier than ever. Before we had even hopped back onto the B-Wave horse, the one that was confirmed at $32,000 by the 6-month-long RSI divergence on the daily, we talked at length about how the $46,500 resistance would be the main level of interest. And so it proved to be, albeit with some wriggle room. Now, despite it being our area of prime focus, we've long kept an eye out for a potential final push towards the $50,000 to $51,000 area, which would nicely match the 618 fib. But due to some technical developments as of late, such prospect is now entirely nullified. As communicated on Twitter, I have now sold off the entirety of my marathon position, for the technical weakness in Bitcoin is bulking up. Hence, staying immersed in longs right now is just much too risky. Now, there are several technical reasons that together call for escalating weakness, and those are precisely what we'll go through in today's episode. But before that, please note that nothing in this episode constitutes financial advice. I am not a financial advisor. And if you appreciate this episode, then please return the favor by hitting the like and subscribe buttons and share it with others who may benefit from hearing this too. Let's now get straight to the point why this is likely to go down. Over the last few weeks, we've been going on and on about how this is a likely zigzag correction with more to give on the downside. And that thesis stands until proven otherwise. Based on this B-wave, the zone between the 0.5 and 618 fib is, given the nature of a corrective B-wave, an automatically high-risk danger zone. And due to additionally emerging technical weakness since the last episode, I have decided to release the entirety of my marathon position. And to those of you who may not know, Marathon Digital Holdings is an American Bitcoin mining company listed on the US Nasdaq. Its stock price is largely dependent on that of Bitcoin, but tends to move exponentially. Hence, when Bitcoin falls, Marathon goes down the hole with it. So why then did I decide to close my position rather than to await the 382 correction as communicated in the last Bitcoin episode? First of all, things change fast in crypto land, and in order to survive, we must remain dynamic, prone to Bitcoin's sudden changes, and to never under any circumstances fall in love with our biases or conclusions. We must be sly like a fox, yet slippery like an eel. Here are the following 5 things that changed the technical roadmap and caused me to ignore the 382 correction. The C wave of a corrective B wave is typically shorter than its A wave. Naturally, this is no news in itself, yet it's something I wasn't aware of myself until a fellow technician kindly pointed it out to me. Technical analysis as a whole is wide and encompassing. This is the reason why I study TA pretty much every single day, for there is always more to learn, deeper knowledge to understand, and never-ending complexities to get one's head around. For once you stop evolving, chances are you'll get cocky and trade on autopilot. Or let me rather rephrase that. Once you get cocky, chances are you'll stop evolving and begin trading on autopilot. And as we all know, pride goes before destruction and a haughty spirit before a fall. With that said, this prospect B wave is thus far made up by an A wave that measures plus 45% and a C wave that in turn measures plus 30% from bottom to top. And we can measure the C wave proportions to the A wave by adding 45% from the C wave bottom, which leaves us at just short of 54,400, and then draw a fib from there to the root of the C wave. And by doing so, we quickly see that the C wave top perfectly matches the 618. And this in turn is a good proportion of the C wave in relation to the A wave. We have a rising wedge and a breakout. Now, this rising wedge can be drawn in either of 2 ways, both equally valid technically. Either it encompasses the entire B wave like this, or else we just include the C wave of the B wave. Regardless of which, they have both broken out of their respective wedges. The only difference between the two is their respective target levels. The big one stands at roughly $34,000 and the baby one at $38,500. And to those of you who may not know, a rising wedge is a bearish formation from which we can statistically expect the price to break out downwards. And whether these wedges will reach their targets remain to be seen. Yet even if they were to, never forget that a formation target applies to the formation alone and does by no account mean the price must stop there. With that said, with or without the wedges and their targets, the upcoming price development is altogether central to confirm or refute our zigzag thesis. And what I mean by this is whether the price will initiate its 5 subwave C-wave impulse to complete the zigzag. We had an upper bearish blue RSI closing on the 1 hour and 4 hour charts respectively, and on the very same point independently of each other. And what then do we mean by independently? Well, both timeframes possess different upper bearish blue values, yet despite this they perfectly matched. Once again, we can speak of the immaculate reliability of the RSI strategies, as they told us to get the hell out already at $47,550, a mere 2% from the absolute local peak. And for more on these strategies and how to properly use the amazing RSI indicator, please watch the extensive RSI trilogy. And while on the subject of the RSI, let's further clarify things. The higher the time frame, the more of a price reaction we can expect upon any upper bearish blue or lower bullish red RSI closing. It's in their very nature, and in this sense the weekly chart is the highest time frame with regular predictability and recurrence that we utilize. There are some rare exceptions on the monthly chart, the recent one in phase holographic to mention one, but they remain outliers. Now, the reason why this is relevant here is because the 1 and 4 hour upper bearish blue sell signals should respectively be enough to reach each rising wedge target. The 1 hour for the baby wedge and the 4 hour for the big boy. And if it were to get there, the rest comes down to how the prospect zigzag C-wave develops, if it stays valid or not. This entire prospect B wave is entirely accompanied by weak trading volumes. We've only had 2 candles that have surpassed the average trading volume mark, one for the A wave and one for the C wave, of which the latter was hardly convincing at all. Certainly nothing to write home about. This volume tells us there is little conviction thus far into this steep 66% price rally. And this in turn further convinces me of a B wave in action, or call it a bull trap. The fifth bear in this lineup is the much too enthusiastic Fear and Greed Index, which has already worked its way well into the 70s. The normal market cycle psychology procedure for any true bullish reversal is for it to be met by skepticism and denial. Typically by that point, the market participants as a collective are so badly bruised from previous bull traps that they are somewhat traumatized by them, as each of them has lured them into money-losing traps. Quite the opposite of the light-headed greed feast we see now. And given that we're dealing with herd psychology, this run out rarely if ever fails. Now, these 5 pointers sure speak volumes, no pun intended. Yet based on this prospect B wave, it should now be completed, period. Why? Because it has already retraced much enough to count. In this sense, any new local top above the previous $48,000 one will automatically cancel and invalidate the prospect B wave, as it's then a 5-wave impulse and not an ABC B wave. So until proven otherwise, as long as the price stays above the $48,000 local peak, this whole move should be treated as the first wave of the final C wave, or more accurately, the first wave of the first wave of the C wave. All that is left for now is to wait and see whether this C wave and its wedge targets along the way play out as expected, or if our B wave gets disqualified. Regardless of what, we'll make the best of it, but until we know more, I'll stay on the sidelines with my funds rather than drink a toxic potion of high risk. That was all for now. Thank you and goodbye.